the press release, but with 722 crores in terms of the net profit, that is much better than what the street was expecting. We were working with around 642 odd crores, and this implies that it's going to be an easy, comfortable growth of over 26% or 25% for Dr. Reddy's, at least on the bottom line. Remember that there are a lot of moving parts for Dr. Reddy's this quarter in terms of how the US business did, because the existing portfolio is expected to continue contributing, but we have the rest of the world business, which is primarily Venezuela, as well as the other markets, which are emerging markets, which would be important. Right now, we just have one figure with us, so I think we have a reaction coming in, but really the crux of Dr. Reddy's numbers lies in the press release as well. The total income just flashed by. Let me just pull that back up if we could. The consolidated net profit or the consolidated operating profit at 925.8 crores. So that is basically reported by the management, and that compares to 646.5 crores. So that is basically a growth of 43% in terms of the operating profit, which is reported by them. And I'll just wait by for the total income. 3989 crores is where it's come in at. So that's a growth of around 11 odd %. So that is largely in line with what the street was working with. What we can clearly say is that it has been a beat which has come in on the EBITDA as well as the profit figure. We have Surajit Pal of Prabhudas Leeladhar who's joining in to talk about the numbers. Surajit, your first take in terms of the Dr. Reddy's numbers. It seems as though it's a margin beat.
Yeah, our expectation of top line is around 3949 crore, and I think 3989 is the announced number.
Yeah. So
it's the same in line. And bottom line is our is 686. You said 646 they have done.
No, they've done 900. This is the reported number, which is 925.8. This is basically what they release in the press release without depreciation being adjusted.
But what is the net number?
The versus, I just have the versus figure right now with me, which is 925.8 crores for this quarter, which compares to 646.5 crores. And this is not adjusted for depreciation. This results in margins of 23% versus 18% year on year. So I'm assuming that the margins will be even higher than what we are currently saying in terms of the operating profit.
What I can read in the press release, the gross profit margin is at 61.3%. And I think if you look at the year-on-year analysis, the press release says that it's an improvement of about 285 basis points. Can we get a quick comment on that?
I will not get into year-on-year. I would say that quarter-on-quarter, which is more relevant.
Yeah.
Because last quarter also, they have a similar 61%, 61.1. And our expectation, our estimates were 61.3 with that 2421 crore was our expectation for Dr. Reddy's.
I also have the breakup which is provided in terms of the countries as well as the segments. So North America is up 32%. It's recorded sales of around 1856 crores for the quarter. So it's a growth of 32% year on year. Europe is up around 65% year on year, which is 212.4 crores, which is basically Germany, UK and the out-licensing sales business. India is up 14%, so I think that's largely in line, 546.4 crores. Emerging markets is down 22% to 661.7 crores, and this refers to Russia, other CIS countries, Romania and rest of the world markets, including Venezuela. And the PSAI market, which is basically the API market generally, is down around 7% to 591.8 crores. So, Surajit, your take in terms of the geographical breakup that I just read out?
Their margin remains same, because I believe that their US business, which I had in estimates of $285 million, I believe they have done similar to that level. I mean 280 to 285. You said 1855 crore. So my estimates were 1867 crore. And emerging markets slowdown, which definitely indicates that they are consciously reducing the sales in emerging market without much of impact on their bottom line.
Okay, performance was flat in constant currency terms, where the growth in Russia, CISR regions were offset by a decline in Venezuela. So even in constant currency, they were flat as opposed to an expectation of growth, or how would the market read that?
I think Russia, they have recovered from Q1. I mean, Russia sales, how much they're saying?
Revenues from Russia year-on-year was a decline of 29% to 290 crores, primarily on account of depreciation of ruble. In constant currency revenue, it was up 11% and total emerging markets in constant currency was flat. That was because where the growth in Russia and CISR was offset by Venezuela. Your reading on that?
Yeah, I think the emerging market, they have done roughly around 260 to 70 crore, and which is a xerox of what they have done in Q1. In Q1, they have done 310 crore. You say 290 they have done. So they are similar line. If that be the case, then emerging market also they have kept it lower, which could be 270 to 80 crore from that perspective. So fine. I mean, very much in line. I mean, their estimates.
Okay, Sarabjit, the core of Angel Broking joins in with her view as well. Sarabjit, what have you made of the Dr. Reddy numbers?
Yeah, definitely higher than expected on the bottom line. And as far as I can read, there are two factors to it. One is that there's an improvement in overall profitability coming in from business mix improving. And especially with its key markets doing fairly well. And secondly, this SG&A has not moved up significantly, actually. So these two are factors, and R&D has been in check this quarter. So I think these are the factors which led margins, profitability to be higher, and consequently net profit. So I think the positivity or better than expectations are coming in net profit because of margin being better than expected.
How have you read the emerging market performance or even other geographies this quarter?
Emerging, we expected a kind of softness and decline also in the markets, but it's higher than expected. Yeah. We didn't expect it that significant, but equally we didn't expect a that strong performance in Europe and America, actually. So I think net, if I have to look at it, some geographies have done fairly better than expected, and emerging market, even constant currency, I think they are doing in Russia, the key market, they're around 11%. So I guess somewhere net, it's more markets doing well than, a few markets, one market doing less than expected.
Okay. Your call on the North American markets is a growth of 32% in terms of rupee revenue to 1856.3 crores this quarter. Do you think that Nexim also has something to do with it? But that was just a late September launch, so I doubt it.
No, I don't think that is much to do with it. That's why I said it's quite commendable what performance they have put up in spite of the product, their portfolio that they have in it.
Okay, so if you had to sum up the entire performance for Dr. Reddy's this quarter in terms of their revenue, EBITDA as well as profit, and the key geographical geographical performance this quarter, how would you rate it and what would stand out to you?
Better than expected, and main standing out point is basically key geographies doing much better, actually.
Do you think that the stock could see further strength tomorrow?
It should see some strength, definitely, because the operating performance have been on a better footing, actually.
Okay. So, Rajit, just a quick last word from you then. What is your last final take on Dr. Reddy's prima facie based on what you've seen, and especially in terms of EBITDA? Do you expect the momentum to continue in coming quarters, considering that even Nexim Generic would be there to contribute?
Yeah, the full benefit in Q3 is expected, Q3, Q4. So I think valuation upwards movement could be expected.
Okay. All right. And do you expect the stock to maybe gain a little more tomorrow?
Yep.
Okay. All right, Surajit as well as Sarabjit, thank you very much for joining in and taking us through the Dr. Reddy's numbers. So what we can take away from it is that the US markets did well, the India business did well, emerging markets in constant currency as well as in in rupee terms was a bit sluggish. Margins were much better than expected and profit was okay as well.
And possibly